Forex Focus brought to you by IG. Euro making huge news here, but interesting that 110 in euro dollar, not the biggest extreme that we've seen in the major and minor Forex pair market. Take a look at that pound versus yen or the Canadian dollar versus yen, and even the pound versus dollar, some big extremes that we're hitting in the Forex market, but have to speak directly to the major euro dollar market and the ECB hike that occurred here today. And then afterwards, even more so, the press conference that brought this market all the way back close to 110, up more than 100 pips here today. What was interesting is, and this is always the case, active traders out there will remember, not always the case, but in recent history around these interest rate decisions, the actual interest rate decision is usually pretty well choreographed and measured and priced in going into the event. And the press conference afterwards is usually where you tend to see the big shifts. And that makes sense, right? The markets have already digested, for the most part, what the European Central Bank is going to do. The European central bankers have been talking for weeks and weeks and weeks, and have been alluding to what the action might be. And you've seen the inflation prints throughout Germany and France and Italy and all these different places within the Eurozone. And so the market is kind of priced in what might occur on a day like today, but the market has no clue what the European central bankers might say for the future. And so we saw about, a 20, 30, 40 pip rally after the 25 basis point hike, which was largely expected by the market. So not so big of a move. And then an extra 70 to 80 pips of rally in this market after the press conference, and some more hawkish tones are hit on here in the Eurozone for potentially bringing interest rates another 25 basis points higher next month. And we'll see from there. That's at least the expectation in today's market. Now, why would this interest rate movement move hand in hand with the Forex pair movement? Well, remember how big of a part the carry trade can be in supply and demand dynamics for a certain currency. Interest rates can have a direct effect on Forex, and thus you're seeing, of course, nothing ever guaranteed, nothing ever necessitating interest rates higher from the European Central Bank, so euro must do this, or interest rates lower, so euro must do this. But theoretically, the relationship goes higher interest rates, greater incentive for a trader to be long that higher interest rate market, because you can get a potentially positive carry. And if you're wondering what the carry is, take a look at our other content around the carry trade, and thus creating more demand for that currency, and thus Forex pair appreciation. Of course, with the caveat that all else is equal. Usually you'll have the European Central Bank, for instance, hiking interest rates as the US is, or as the UK is, or as Japan is, though not Japan recently. But I wanted to take a look at the historical price action here for euro and lay on top of it interest rate differentials at these different times, because we're running back up close to 110 in euro USD. And when we were at these lows of last year that we hadn't seen in 20 years, below parity, under $1, even there, the rate difference between the US versus the Eurozone was almost 2%. And that was pretty high for recent history in interest rates. And so the US dollar appreciating against euro as U.S. interest rates are rising higher than European central bank interest rates. Now, you go back to the start of 2022 or even into 2021, and you've got euro dollar exchange rates closer to 115, even up to 120 there. And that's when interest rates globally were pretty much around zero, at least amongst the major economies like the US and Eurozone. And so now we're kind of smack dab in the middle there as the European Central Bank hikes today, and they could hike again in the near future. And if they hike a couple more times, they would be up to where the US is in interest rates. That being said, the US has their own angle on this too, right? They can start hiking again. A lot of people think that they will at the next FOMC meeting. And so as this rate differential expands and converges as well, you'll see similar price fluctuations here in the exchange rate. Again, one doesn't necessitate the other. For example, there was great euro appreciation against US dollar earlier this year around the time of the US-based, the US-centric regional bank crisis there. So there's always different stuff that can throw off forex markets that are outside of interest rates, but always interesting to look at and usually a pretty direct correlation. Now let's take a look at what IG clients are thinking. 56% of traders now short that Euro USD market, and that's not an overwhelming position. We've seen some of these sentiments from traders get to 70%, even 80%. But it's worth noting that with euro dollar down closer to 108 or 107 or even 106 in recent weeks, this sentiment was flipped. It was on the people on the long side, and now it's flipped to short as we've neared 110. And we'll see if the Fed can bring that differential a little bit greater again. 67% chance of a hike in July. I know I'll be watching both the European central bankers and the US central bankers to see what they do in interest rates and see how that plays out in the foreign exchange market.